For the rest of the action on the local market, I spoke to Charlie Aitken from Southern Cross Equities. Charlie Aitken, there's been no post-election bloodletting on the markets or the currency markets. Did you expect the market to hold up so well?
I think, Bridget, this was a pretty good effort from both the currency and the market today. But people were trying to look through the hung parliament and think, what would the compromise bring? And a lot of the thoughts were that there would be probably further compromise on the mining resource rent tax, which may actually see it abandoned, and some sort of compromise in pathology or the national health system. So the market was trying to be optimistic and see through this. And quite frankly, it was a very good effort by both the market and the currency today.
Telstra has gone ex-dividend today, but that only accounts for some of the 20-cent drop. What can we read into this new low on the stock?
Well, you've got to remember, Bridget, that some of the drop is also franking credits, which are worth something to most private investors. But also, I suppose the election being in limbo, the election result being in limbo, probably, again, muddies the water for Telstra. The market wasn't sure whether the NBN would be built, not built, partially built. And considering Telstra's results the other day, some people are pretty keen for them to get the $11 billion that the government's promised to compensate them for their copper network. So, again, just muddy waters for Telstra, and to me it looks like those shares will drift lower in the shorter term.
And Caltex has issued its half-year results. What was the investor reaction?
Well, pretty good. Caltex shares up almost 3%. The result came in at the top end of guidance. It was still down 50% on the year before, but Caltex management also gave some pretty upbeat outlook about the supply-demand balance in refining products in Australia. And I think the market was right to move Caltex shares up. It looks like the worst is over there.
And there's some more talk about a takeover of Foster's.
Yeah, Foster's, it's like the story that never goes away, the takeover, but this one had a little bit of credibility. Foster's shares up 7% on rumours that the beer giant SAB Miller out of Europe was looking to buy the Carlton United beverage division of Foster's, which is obviously Crown Lager and VB, etc. And the market wants to believe that because it believes that CUB is worth something, but it has to get its head around who's going to buy the wine division, and it hasn't really worked that out yet, but they wanted to believe that rumour today.
And still with takeovers, Prime Infrastructure Group could also be a target.
Yes, and the Brookfield Management out of Canada have launched a takeover for Prime Infrastructure. Why this is interesting is this is about $1 billion bid, but the main asset of Prime Infrastructure is the Dalrymple Bay Export Coal Terminal, which is the main coal terminal out of Queensland. The market thought this was a pretty bullish development and probably interesting for the long-term view on coal. So other coal stocks did quite well, other infrastructure stocks did quite well, and it's just another takeover in Australia.
And no doubt an interesting week ahead. Charlie Aitken, thanks for talking to Lateline Business.
Thank you, Bridget.